income statement, balance sheet, and statement of cash flows are three heavily used financial statements of public companies. Statement of cash flows illustrates the inflows and outflows of cash during the period. It does not use accrual accounting and is concerned with the actual cash collection and uses. A company's ability to generate cash in a timely manner is important to investors because it is paramount to the sustainability of the company. The first section of the cash flow statement is the cash from operating activities. Most companies use the indirect method to calculate this, starting with net income from the income statement and adding back the non-cash charges such as depreciation. This section focuses on the cash flows from the company's fundamental operations. The second section captures the cash from investing activities and would include cash used or generated from the purchase or sale of buildings, land, and equipment. These are also called capital expenditures and are required for a company to continue to grow operations and/or capacity. The last section is focused on cash flows from financing and will include loan payments and proceeds, dividends paid, or company share repurchases. The statement of cash flows is a very straightforward financial statement and easily compared across companies and industries. There are no accounting assumptions used in the preparation that would differ from any other company cash flow statement. Ratios and metrics that use the cash flow statement data, such as free cash flow and price to free cash flow, are commonly used in fundamental analysis. The statement of cash flows is an array of raw data that can be analyzed in many ways. Some of the more basic ways might be to view the trend in the accounts back through time. For example, Johnson & Johnson's property, plant, and equipment purchases, otherwise known as capital expenditures, have been in the $2 to $4 billion range for the past 10 years. They also appear to be growing somewhat over that time frame. The latest value of $3.6 billion is much higher than the 2004 value of $2.2 billion. Another way to view the statement of cash flows is by column. For example, in 2013, the company's cash balance increased $6 billion. This was accomplished through a $17.4 billion net cash flow from operations, a $5.1 billion use of cash from investing, and a $6.1 billion use of cash from financing.